Warren Buffett is a name that has become synonymous with capitalism, the American dream, and financial success. But how did a poor boy growing up during the Great Depression become one of the world's richest men? Before we begin, don't forget to like and subscribe to this channel for more intriguing videos like this, and be sure to watch this video to the end. Therefore, anytime we upload a new video, you will be notified so that you won't miss out on interesting videos from us. Let's dive in without further ado. Today, we'll look at an American financial legend and how he made his fortune. Warren Buffett was born in Omaha, Nebraska on August 30, 1930. Buffett learned to value money early in life after witnessing the brutal reality of the American Great Depression. His family lost all of their savings during one of the worst financial crises in American history, as the bank where they kept their money closed just before his first birthday. Buffett grew up in poverty, watching his mother skip dinner so that his exhausted father, who worked any job he could find, could eat a full meal. He'd also have to deal with the embarrassment of his family skipping church because they couldn't afford the mandatory tithing. Rather than wallow in poverty, a young Warren boldly declared one night at the dinner table that he would make his first $1 million by the age of 35, or he would jump off Omaha's tallest building. Warren Buffett displayed an incredible talent for math and numbers from a young age. He was particularly interested in patterns and would play games in which he recorded the license plate numbers of passing cars and then wrote them all down that night to figure out which number came up the most often. This finely honed talent for pattern recognition eventually drew him to a new game that foreshadowed his future life. One day, as he watched men buying a soda from a machine, he became curious and began collecting the discarded bottle caps. That evening, he returned home and counted all of the bottle caps he had collected, then repeated the process for an entire week, learning which brand of soda sold the most and which flavors were most popular. Warren's mind was drawn to numbers, patterns, and finances, and he quickly progressed to recording stock prices from his father's newspaper, repeating his soda pop diligence to figure out high-performing stocks. A young Warren dreamed of that first $1 million and the opportunity to invest it, feeling as if he was watching the world of finance through a glass cage and not being allowed to participate. With the Great Depression over, Warren watched as his father, fearful of rising inflation after the post-World War II financial boom, invested what little money he had in tangible assets such as gold coins, a crystal chandelier, and sterling silver dinnerware. This influenced Warren's preference for tangible assets over intangible assets, as well as an investment philosophy which favored businesses with tangible assets and proven earning power. He would go on to his first job as a paperboy at the age of 13, where he realized he could maximize his earnings by diversifying his product line. To that end, he began selling magazine subscriptions to his paper route customers, preferring to sell subscriptions right before they expired to ensure a quick second sale. His paper route would eventually pay him $175 per month, or $3,000 in today's money. Warren had saved enough money by the age of 15 to buy a 40-acre farm in Nebraska and hire a laborer to work on it. After graduating from high school, he used farm profits to pay his way through the University of Nebraska, earning a Bachelor of Science degree. Warren applied to and was accepted at Columbia Business School after being rejected by the prestigious Harvard Business School. He would study under legendary value investor Benjamin Graham. When Warren moved to New York for business school, he chose to stay for free at a local YMCA rather than pay for room and board elsewhere. He resumed his paper route, but this time he put his money into pinball machines that he would place in local barbershops. Buffett's pinball days would teach him more practical business lessons than school. Convenience and service command higher prices. Location is everything. Efficiency determines profit margins, and business scalability has practical limitations. Warren returned to Omaha after graduating from Columbia Business School to study public speaking. While teaching investing at the University of Nebraska, Benjamin Graham, his old teacher and mentor, offered him a job as an investment salesman and securities analyst in 1954. By 1956, Buffett had purchased a home for his wife and young daughter and had saved $174,000, or slightly more than $1.5 million in today's dollars. Warren decided to retire at the age of 26 because he believed he could live comfortably on the earnings from his investments alone. The young Warren, on the other hand, became restless as his childhood dream of becoming a millionaire resurfaced in his mind. Warren came out of retirement in 1956, deciding that he would have to be far more active to achieve his goal, and he founded Buffett Partnership Limited. Building on his childhood lessons, Warren grew his fortune by investing in businesses with proven earning potential and tangible assets. His most significant transaction, however, was the acquisition of Berkshire Hathaway in 1964. Berkshire Hathaway, founded in 1839 as the Valley Falls Company, would go on to become a highly successful textile manufacturer. However, with declining sales following a drop in global textile sales following World War I, the company's financial future appeared to be on the decline. Warren Buffett, ever astute, noticed that its stock prices would skyrocket after closing a mill, so he invested heavily in 1962, hoping for a quick profit. In 1964, CEO C. Barry Stanton offered to buy back Warren's shares for $11.50 each, and Warren accepted. However, when he received the written offer, he discovered that the price had been secretly reduced to $11.37. Furious at the undercutting, Warren decided to buy more stock and take control of the company, firing Stanton immediately. This put him in the position of owning a failing textile manufacturer, so while he initially focused on textiles, by 1967 he had begun to invest company funds in insurance and media. He would eventually close down the entire manufacturing side of the new Berkshire Hathaway, focusing solely on investments, insurance, utilities, and energy. Warren Buffett turned around a failing business in just a few years, and by the age of 30, had achieved his goal of earning $1 million 5 years earlier than planned. Although Berkshire Hathaway would go on to become his flagship for all business investments, Warren decided to dissolve his firm, the Buffett Partnership, to focus all of his efforts on developing Berkshire Hathaway. After exiting the textile business, Warren concentrated on media assets such as the Washington Post, Exxon, and insurance behemoth Geico. Berkshire Hathaway began trading at $775 per share in 1979, rising to $1,310 by the end of the year, boosting Warren Buffett's net worth to a whopping $620 million. Warren, however, was not content to rest on his laurels and set a new goal of $1 billion. The same year his net worth surpassed $600 million. He directed Berkshire Hathaway to purchase stock in the television network ABC. Buffett helped finance a $3.5 billion deal in exchange for a 25% stake in the combined company by partnering with Capital Cities, a media company worth roughly 1/4 of ABC's net worth. This transaction would shake the media industry as the much smaller Capital Cities purchased and then merged with the media behemoth ABC. Warren began buying Coca-Cola stock in 1988, edging ever closer to his billion-dollar goal, eventually amassing 7% ownership in the company, one of Berkshire Hathaway's longest and still held investments. With Berkshire Hathaway's share of Coca-Cola stock alone worth $1.02 billion, Warren Buffett finally achieved his goal of becoming a billionaire on May 29, 1990, when Berkshire Hathaway stock closed at $7,175 per share. Berkshire Hathaway would go on to become one of the world's most powerful and profitable companies, thanks to careful investments based on his childhood lessons of preference for businesses with tangible assets and proven earning power. With Warren Buffett at the helm, he would more than triple his fortune in just 6 years, earning $17 billion by the age of 66. His real value would be exponentially higher today if he hadn't given away more than $27 billion to charitable causes in the last decade alone, and despite being one of the world's richest men, he remains an astonishingly frugal man who prefers a mid-2000s style flip phone over a smartphone and frequently has McDonald's for breakfast. Warren Buffett's rise from dirt poor to one of the world's wealthiest men is a true success story of capitalism and a free market hero. Is Warren Buffett's incredible success story still possible today, with today's widening wealth gap, skyrocketing healthcare costs, and the difficulty for lower-income families to find credit at affordable rates? Let us know what you think in the comments section below. With that being said, that's all for today. Thank you for spending some time with us. If you found this video interesting, make sure to hit the like button and the notification bell and subscribe to our channel to get access to more interesting videos from us. Till next time.